So what were some of the key factors that contributed to the success of the fund?
Well, I think, first of all, we were very focused on sponsorship first and foremost, right? So we really wanted to make sure that that investor had the right track record. Now, that doesn't mean that every single investment that they made was a home run. If you've been doing this long enough, you are not going to make money on every single transaction. The question was more, when things don't go well, did they treat their partners well? So we were very interested in checking their references and talking to their lenders and other partners, and how do they perform and what do they like as partners, right? So that was really important.
This is a Real Estate Vibe Show. I'm your host, Vinki Loomba, and today I have a very special guest with me. He's my good friend, James Nelson. Welcome to the Real Estate Vibe Show, James.
Thank you so much for having me, Vinki. Very excited to be with you here today.
Yeah, me too. I'm excited to hear all about your new book, and thanks for sending me the copy of your new book, The Insider's Edge. I can't wait to read it. So a little bit about James. James is a highly acclaimed investment sales broker. During his 25 years of career, he has sold more than 500 properties and loans totaling over $5 billion. He's also a real estate investor and has launched 2 real estate funds with total capitalization of over $350 million. And we're going to be talking about that for sure. He's passionate about helping others achieve real estate success and offers regular training through his podcast, The Insider's Edge to Real Estate Investing. And our today's topic of discussion is the insider's edge to the real estate investing. So I'm going to start with that question, James, to you. What is insider's edge to real estate investing?
Wonderful. So I think for those of you listening out there, and I know that you've got a great audience of ranging from people looking to get into the business, investing for the first time, to seasoned professionals. And I think regardless of what stage you are, it is possible to gain the inside edge to real estate investing, which is what I love so much about real estate, as opposed to, say, investing in the stock market. So in the public markets, everybody has access to the same information, right? There really is no way to kind of get that inside track. And there are still incredible inefficiencies in the real estate business that you can take advantage of. And I learned that very early on in my career, when I'd look at one property that sold on the block, that sold off market without a broker, and another one, almost identical building, that sold for several $100,000 more because that was broadly offered to the marketplace. So very early on, I learned that you can find great opportunities, maybe ones that other investors don't know about, and then you have that ability to reposition that asset, to bring value. And if you have a thesis that you can bring something new to an area, that you can really profit from it and outperform the market.
So what are some of the common misconceptions people have about that?
Well, I think a lot of people don't understand how to get into real estate, and it is challenging because there aren't a lot of resources out there. Thankfully, there's great podcasts like yours. I wrote this book largely because for 20 plus years, people have always asked me, James, what is the book that teaches me how to invest in real estate? And there's a lot of the kind of entry level, fix it, flip it type books out there. But if you want to buy a 20 unit, 100 unit apartment building, retail, office, these are more complex transactions. They're larger transactions. A lot of the principles still apply. But I think it's just in large part fear. I think a lot of people, and maybe they're listening right now, they're interested, they're intrigued about the idea of owning real estate, but they just don't know where to start.
So what is the fear? Let's talk about that. Because I kind of hear and feel that too in my investors when I'm talking to the investors. I think according to my experience, I would say it's more like education gap or the knowledge gap. Because if people do not know about something, they're hesitant to try, or they're even hesitant to take that route. They worry too much. They feel like, oh, I'm comfortable here. I'm not going to challenge my status quo. So what is your take on that?
It's a great point. And even as part of my book tour, I've been speaking at a lot of the top masters programs in the country. And there's a lot of really smart students out there, and they understand the valuation process. They understand how to underwrite. They understand the theory and why this makes sense. But the piece that's often missing is the practical piece. How do you do this? And so I've lectured before, and I know as you have lectured in the past in a room full of students, and you ask them a question, okay, well, how do you go about buying a property? What would be your first step? And I think a lot of people going into this business, sometimes they just expect that someone else is going to do it. So if I'm going to be, okay, I'm going to be the analyst, but someone else from the acquisitions department, they'll handle that. And I think to be a great investor, you need to understand the whole process from start to finish. And I know you've put out a lot of great content on the benefits of passive cash flow. And even if you're a limited partner listening right now and you're looking for a great sponsor who can run the transaction for you, and so you're basically just providing the capital, you still need to understand the opportunity and know how to ask the right questions to make sure that you are investing your money wisely.
I agree with you 100%. So let's talk about how do you do it? And you even wrote the whole book about it. How do you do it? How to get started? So what is the trigger point, or what is the point where people like, okay, I should do it or I should not do it? What is the fine line between the two?
Well, I think real estate investing for many, first of all, it has that appeal that we're talking about, a physical, tangible asset. And I think for a lot of people who maybe you're listening right now and you have invested in the stock market and you feel like you have no control because you're not making the decisions at the company's level. I remember, I'll tell you how great of a stock picker I am. I bought a car during COVID through Carvana for one of my sons. And I said, this is the most incredible company ever. You just press a button and they send you a car. How amazing is this? And of course I said, this is going to be the future. Car dealerships are going to be wiped off, the face of the earth. And, sure enough, they did not go away. And it's actually really expensive to do this kind of business. And as a result, the stock price plummeted, right? Once car prices went down. So again, none of this was in my control, right? And I could have really studied up on this. Maybe I would have known better. But the appeal of owning and operating real estate is that you have that control, that you can make those decisions and you can find that opportunity. And just because an owner is running a building in a certain way does not mean that it's the highest and best use. You might find that old rundown building on a corner near where you live, and you go in and you've looked at the apartments they have for rent and they're still the same old, 1970s renovations. And you say, look, a lot has changed in this area. We could definitely update. We could charge a lot more rent for these apartments. And look, that old tired office space on the corner, that should be a new cafe, right? Where we could be charging a lot more for retail. So I think that ability where you can buy physical hard assets that are oftentimes cash flowing, where you have a vision and you can improve on it and capitalize on that upside. I think it's very comforting for investors to know that they can control their destiny in that way. Obviously, there's macro effects that to be considered. And if you look back in the last year with interest rates going up, sure, if you bought a real estate investment just hoping that you were going to benefit from this kind of cash flow and rates staying where they were, that might not have worked out so well. But as long as you have that upside and that ability to reposition the property, that will certainly help you outperform the market.
That's true. And on the Caravana thing, I have done multiple case studies during my academia years. Every year or every semester, we used to have that case study in our class because one or two teams always picked that because there was a new phenomena. Everybody wanted to study and learn from there. But it was like every time there was a different outcome, just to let you know. So talking about the passive investing, how people are hesitant, they have fears. So I wanted to say one thing, when I started investing passively, I was kind of in the same boat too. So, but it's like you have to understand that, have your executive cap on. So you have to think from a perspective that you're hiring somebody to make money for you. You're hiring this whole team. Right? So how do you do the due diligence? How do you interview the people when you hire somebody for a job? So here you're hiring a whole team who's going to make your money work for you. Right? So you'll take every step to make sure that it's the right team. They have a good track record and they will take the deal from conception to completion. in flying colors and you'll make money basically, right? So this is the concept has to be clear from the passive side of it. What do you think about that?
No, I think that's absolutely right. And it's another just layer of concern, right, that might be holding someone back. And what I talk about very early on in the book is this is a business about the people. So yes, there is physical real estate involved, but it's really the people and the team that you put together, or if you're a limited partner, the team that you are entrusting your capital with, that they're going to execute on that. And I think trust, I mean, it's a very challenging thing for people to gain. You know, you hear about all these scandals, and there's one happening right now with a crowdfunding raise that went awry. So, I mean, my rule is that when I'm investing with other sponsors, I like to have that personal connection, or at least that referral, right? And using that personal network. So I would not be quick to just see something online and say, okay, that sounds great. But you use your network of friends and family, and then you build your sphere from there. Because I think the most important thing in this business or any business is to deal with honorable people.
That's true. And especially in this kind of market, you know. And talking about the market, can you speak to any other specific market trends or patterns that you have been noticing lately?
Sure. So I think, first of all, it's really important not to paint the market with one brush. So it's so specific with the area that you're looking in. It's so specific to the asset class. So what's happening in multifamily is very different than, say, what's happening in office, right? And with retail, you can't just kind of put that all in one bucket, right? Very different if we're talking about urban versus suburban, credit versus mom and pop, shopping center, mall, street retail. So it's very specific. And so that's why what I talk about in the book early on is becoming an expert and specializing, right? So part of that is generally starts with a geography that you know really well, okay? And studying it. When I started off in the brokerage business, before I started picking up the phone and started to call owners, the founders of my company said, look, you're taking the next 3 months to just study the neighborhood. We want you to research all the owner information, every sale that took place, what properties are leasing for, zoning changes, new companies. And look, it was frustrating. I was out there on commission and I wanted to pick up the phone and start dialing for dollars, but I certainly wouldn't have had any value to bring to the table. But I will tell you that after I studied that area for 3 months, I knew more about that area than most of the investors out there, and a lot more than most of the brokers who are generalists. So the advice, Vinki, that I would give to your audience is, if you're interested in investing, and you obviously are because you're listening to this, pick an area that is interesting to you, study that area, study the trends, really become the expert.
I agree now 100% because I think learning should always be there. Life is all about learning, no matter what you do. And then the more knowledge you're going to acquire, the more experiences you're going to create for yourself, the more experiences you're creating for yourself, the bigger perception you're going to have. With the bigger perception, the fear is going to go less and less and less. And then it's going to give you opportunity to make better decisions for yourself. You have more clarity what you want to do. So you will excel in whatever you're doing. So here I'm going to ask you this question. I was reading your bio and I saw that you have 2 funds over $350 million. So can you briefly share your journey with me, how you started in real estate, first of all, and eventually managing funds at that magnitude, you know?
Sure. So as an investment sale broker, I see a tremendous amount of opportunities, not just properties that are selling, but seeing how different investors, developers, how they run projects, what works, what doesn't work. And fortunately, very early on, I had the opportunity to invest in a deal that one of my clients had come across. Now, for the brokers listening to this right now, you do have to be careful with the way that you go about investing if you're a broker, because what you don't want to do is set up a conflict. Okay. So I would never, as a broker, if someone calls me for advice on a property they want to sell, I'm never thinking about how am I going to go buy this property. I'm thinking about how can I get the seller the most money for their property. Okay. But it is fair game, whether I have a client who's buying another property, maybe it's through another broker, and I see a lot of those opportunities and have that ability. What I realized was in the place where I sat and with my partners, we saw a lot of opportunities, deals that were signed that we knew we liked the price, we liked the sponsor, we liked the business plan, and the value that we could bring to the table was the capital. Because what's interesting, Vinki, is, and you probably know this all too well, I mean, sometimes it can be easier to get that $20 million check than say that $2 or $3 million check, right? So you have big institutions that are investing in these larger type opportunities, but a lot of the small to mid-size investments are more friends and family. That's typically how a lot of these deals or these syndicates raise money. So he said, well, what if we put together a fund that would go out and provide JV equity for value add deals here in the city? And so we raised $50 million that we parlayed, as you said, into about $350 million of total capitalization in a portfolio in the first, each of these funds, 7 or 8 transactions. So that was a way that we could participate in the market. We realized that, first of all, our day jobs as sale brokers, we were not going to have to be on site, working the property every single day, overseeing the construction, the leasing. I mean, that's not, you have to understand what your strengths are. And so we realized we knew how to find the opportunities. We knew the great sponsors. We had a sense of what business plans would work. And for us to bring capital to the table on behalf of our investors to put together a portfolio was a great way to go about it.
So you are like co-GPing with somebody else or some other syndicator, you're plugging into somebody else's deal. You're fine.
That's correct. Yes.
Interesting. So what were some of the key factors that contributed to the success of the fund?
Well, I think, first of all, we were very focused on sponsorship first and foremost, right? So we really wanted to make sure that that investor had the right track record. Now, that doesn't mean that every single investment that they made was a home run. If you've been doing this long enough, you are not going to make money on every single transaction. The question was more, when things don't go well, did they treat their partners well? So we were very interested in checking their references and talking to their lenders and other partners, and how do they perform and what do they like as partners, right? So that was really important. And then I think vetting the business plan and understanding, sure, I mean, it really helps when you buy a property for a great price, but then what are you going to do with it? And do you really have a sense of how to reposition it where you're not trying to over improve the asset or you're trying to build something that no one wants in the area? So it was really important for us to know. For example, one of our most successful investments was we invested in an office condo conversion. Obviously, this was pre-COVID, down in Chinatown here in Manhattan. And we had a sponsor who had just developed and sold out condos in Chinatown before. And he says, look, this community wants ownership and they want to buy. And it was a fantastic execution. That was a very specific business plan from someone who understood that market and understood how to capitalize on it.
Interesting. So you have 2 funds, both are real estate. So it's like is it like a closed-end fund, open-end fund?
Closed, yeah. Both
It's
of
a
them are
closed
closed
fund.
out.
Is it
And
like
at this
5,
point,
so 3C1 funds?
These were not open. These were for accredited investors. So these were not, a lot of the crowdfunding platforms today are available to non-accredited. So these were, I'm trying to remember now which filing that we did. I mean, again, the last fund that we raised was over 5 years ago, but it was for accredited investors.
Interesting. So was that easy, hard? Because managing large real estate fund could require a lot of strategic decision making. So what were some of the takeaways for you when you were trying to manage these funds? And you did second one too after the first one. So obviously it worked for you, right?
Yeah, so we had a great partner in River Oak. River Oak is an asset manager that had 5 successful funds before. And so when my partners and I had the idea to put together a fund to raise money to invest in New York City, we knew that, to your point, our specialty was not running a fund, asset managing, the reporting. And so our role in the partnership was really to find these opportunities to help raise capital for it. But we had a very experienced fund manager who could make sure that we were doing all the proper reporting and execution for the investors.
And what are some of the red flags or the risks that you saw with these funds, or any steps that you took to mitigate those?
Well, I think the biggest unknowns are always things that are outside your control. So, for example, in New York City, multifamily had significant changes in rent regulation. And so in some of these cases, we had invested before they put more of these restrictions in place. So that is, that's something to keep in mind when you invest. Are there outside factors that could affect what you want to do, whether it's rent regulation, whether it's zoning, tax abatements? These are the kind of things that can have major drivers for an investment. So I think those are the biggest things. I mean, and obviously overall market conditions. I mean, no one would have ever expected COVID. I don't think anyone really expected, what happened with rates and how quickly they went up. But again, it goes back to a point I was making earlier, is that you really want to make sure that your business plan, you try to stress test it. You try to think of kind of that worst case scenario, and you always want to have that baseline case and then, best case, to make sure that even if things change drastically, that there's still a way for you to make it a successful investment.
So at this point, having that experience, some are like really good experiences or lessons learned from this fund structure that you had, or the two funds that you have, what advice would you give it to the aspiring real estate investors or the fund managers?
I think specialty expertise, that is always so important. This is a business where, again, you really can gain that insider's edge by getting really specific. So when I talked about that office condo conversion in Chinatown, I mean, that is a really specific business plan. But to make it work, we needed the right partner who had done that before. I'm sure if you were from outside the community and you just walked in and tried to do that, maybe it would not have been the same execution. So this sponsor really understood the local drivers and how to make that work.
Interesting. So let's talk about your book a little bit, this Insider's Edge to the Real Estate Investing. What is this book about, or how did you come about it? What made you write this book?
So again, this really came out of, for 20 plus years, people always ask me, James, what's the book that teaches you how to do this? And I always struggled to find a book that really explained how this works. There's a lot of books out there on theory and the benefits of owning real estate, but the actual practical how-to is I think lacking in a lot of the books. And so, for example, I have a chapter that in large part deals with broker relations. Investors probably spend a lot of time thinking about how important that relationship is with not just a broker, but multiple brokers. Okay. So if brokers are involved in the majority of transactions out there, whether they're on market or off market, your ability to find that opportunity is going to be a matter of cultivating that relationship with a broker. So I want to get very specific with examples on how to do that. I think also in a market like this, or I can make the case in any market, that when you're looking for a great opportunity, one of the most important things to ask about is seller's motivation. And as a broker, I'm surprised how rarely investors ask me, James, why is your client selling? Okay. Now, look, if my client is facing financial challenges, I'm not going to volunteer that, right? I mean, obviously, if it's a court-ordered sale and there's a bidding process, then sure, it's very clear what's taking place. But let's say a client has a loan coming due and they have to do something within the next 6 months, right? Even though I'm not advertising that, right? The savvy investor, before they even bid on a property, they're going to look to see what is the debt on that property. And if I'm asking $18 million for the property and there's $14.5–15 million of debt, you know very well that in this climate, it may not be possible to refinance that amount. right?
Mhm.
And so that owner likely is going to need to do something. Now, if those numbers are reversed, where the borrower, the seller, owes more than the property's worth, you're probably wasting your time pursuing that situation, because the real party you should be speaking to is the lender. So I think really understanding who's on the other side of the table, where's the opportunity, that's really important. And again, I give very specific examples in the book, because the goal is that whether you read it or someone who has never invested in commercial real estate before, they read the book and they say, okay, I understand how this works. And I know what to do tomorrow to find my first opportunity, how to find a great partner, how to build a team, how to acquire the property, how to reposition it, right? And I think this season, if you're a seasoned veteran investor listening to this as well, some of these things might seem obvious to you, but you might think, that's actually a good idea. I haven't thought about that for a while. Or you know what? Maybe instead of just waiting for my broker to call me once a month and offer me whatever's currently on their plate, maybe I should put a call in to them and check in, or maybe stop by their office, which might seem, again, foreign to a lot of investors. Wait, I think it's the broker's job to bring me things. Well, no, maybe you go see the broker. And I guarantee you, if you sit down and spend the time with them, there's probably going to be things that come out of that meeting that you likely wouldn't find on a multiple listing service.
Yeah, thanks for sharing that. I really like your mindset there. Obvious things are not obvious after all. We all know that. And the other thing is, this building relationship with the brokers is very important. Or I won't even say just with the brokers only, building a relationship overall is very important, because this is a relationship game, that real estate investing, whether it's a broker or your property manager or your investors, different kind of relationship. You need to have a holistic picture. And most of the time people get caught up in their own story that they're trying to build from themselves, and they just try to live that. And that contributes to your success or failure, I would say. So you need to get out of your story and you need to hear the other side of the story too. So need to have kind of holistic picture. So I was looking at your book, and then you wrote a chapter on capital raising. And since you are like I would say a huge success in that space as well, having two funds, $350 million, I would love to hear some of the tools or tricks that you have mastered over the course of time. And I think my listener will appreciate that too.
Of course, and this goes back to, again, this is a business about relationships and doing the right thing. And as you mentioned in the introduction, I have my own podcast. And one of my favorite episodes was when I interviewed Jordan Vogel and entitled the episode "Just Do It." So I took a play out of the Nike handbook, and he talked about stepping up and talked about how most of the investments he made the next day he regretted, right? He thinks, oh no, I overpaid, but he talks about, having that conviction. But he also talked about how he built up his investor network. And it started by his thinking about who are friends, family, people who I know, kind of going back, thinking growing up, college, first jobs, who could write a $25,000 check, right? And even if they didn't have interest, who did they know who might have interest? Because again, especially when you're starting out, you really need some people who have conviction in you, who are willing to make a bet on you as opposed to just the property. So that's great advice for starting out. I also, as I write about in my book, if you're doing this for the first time and trying to raise capital, I'm not going to say you have to, but your chances are so much greater if you have a partner. If you have a trusted, experienced partner who has done this before, they have a track record that you can leverage. Not to mention, they probably also have their own investor base that you can work off of. So my recommendation is, for the first couple investments, team up with an experienced partner. So when you go to family and friends who know you and trust you, but they might still be a little hesitant because they might say, well, that sounds great, but you really haven't done this before. And I'm not sure if I want to be the guinea pig. And so if you can say, well, wait a second, I helped find this opportunity, I vetted it, but this is my partner who's done this a dozen times before. Look at these other successful transactions that you can leverage.
Thank you for sharing that. I really like that. And this is all the important steps, as a beginner. And even if you're scaling, you have to keep that in mind because, again, like say, create your story, stick to your story, but at the same time, have a holistic picture, need to know what's going on all around you. And another question I wanted to ask you here is, how do you see the real estate market evolving over the coming years now? Look into your crystal ball and tell us some of your predictions, what's going to happen next year, maybe, or maybe the following year.
Well, I just wrote an article for Real Estate Weekly that was entitled The Best Buying Year Since 2009.
Mm-hmm.
And I do think for the reasons that I shared earlier, where you're going to see a lot of owners who are in a position where they need to sell. We are going to see opportunities. And these weren't just the people who bought over the last 5 years. There's plenty of long-term owners who thought they had conservative leverage at 60, 65%. But when they go to the lender, they say, okay, well, you need to pay this down based on the new debt service coverage ratios. So I think that's going to force a lot of sales opportunities. And there is going to certainly be some distress as well. And so I think today you can certainly find opportunities that have much greater yields based on what's taking place. But I think there's also still opportunities for huge upside. There's still a lot of these post-COVID arrangements, certainly retail, where the rents were very low to try to get a tenant in. And maybe those rents today are still only a third of where they were at peak. And who knows? Are we going to go back to where we were pre-COVID? I hope. But even if they end up at 50, 60, 70% of the prior peak, that still gives you a lot of upside and potential. So I think right now, again, you're going to see a lot of great opportunities. And it is a time, this past, I will say since last June, once rates started going up, what happened is most buyers were on the sidelines because they were saying, well, if rates keep going up, there's going to be downward pressure on pricing. And they're right. So there will be more distress, more opportunities to come. So what am I going to do? I'm going to wait. And so what happens is in the meantime, there are opportunities now. Right. Everybody's waiting for the big distress. And meanwhile, there's opportunities where, again, going back to seller's motivation, where owners need to sell and there's not as much competition. So sure, can you wait and let's see if there's more distress and if the banks start selling off more assets or loans? Well, that could certainly happen, but then you might also be faced with a lot more competition. I will say this go around, there's a lot more dry powder that's out there willing to jump in. And so what I'm suggesting is now is the opportunity to strike where you can still get great pricing and not have the competition that I think you're going to be seeing if you wait too long.
I agree with you 100% on that. I'm a firm believer of now because if you see the opportunity now, you need to jump on it. Because if you keep on waiting, sometimes we just keep on waiting. From my experience, I can tell you, if I put something on the back burner, on the sidelines, I'll come back to it, or I'm just waiting for the right time. That never happens. Because when you have the resources, every time is a right time. And like you said, challenges, yes, it's a challenging market, but it's a lot of opportunities too. Challenges bring opportunities. So it's all depend upon your vision, on your strategic direction, which way you want it to go. So this brings us to the end of our show because we are out of time. But I would like to ask you one more golden nugget from my audience, maybe from your book, since this is filled with golden nuggets.
Wonderful. So I think, let's see, we've covered how to find opportunities, seller's motivation. I think we've kind of talked about it, but just the conclusion of the book and what is so important is your reputation. It's paramount. So look, if you see a way to cut corners or if you're not straightforward in what you're doing, maybe there's some short-term gain, but this is a long game business. So you really want to do the right thing, and even when people aren't watching. And so I think that's really important because as big of a business and industry as there is, it's a very small world and your reputation is paramount.
I agree on that 100%. Your reputation is everything. And plus, it's a marathon. It's not a sprint. So just take it slowly and believe in yourself. So this brings us to our why rapid fire round. So I'm going to ask you 5 questions. You're going to answer in 1 word or 1 sentence only. Are you ready?
Yes.
So number 1 question is, what is one of the most important things that you have learned in your life, and how did it change your life after learning it?
Having great mentors.
I like that. Mentors go a long way. Share with me 1 good book other than this book that you have read and recommend to my audience.
Adam Grant's Give and Take.
I like that. In 1 word, what does life mean to you?
1 word for life. Happiness, giving back, family.
That's
A lot of words come to mind.
Well, those are all good ones. What is your biggest passion?
I would have to go with family again. Yes.
Good one. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
Take greater risks. I think, again, early on, we have a sense to doubt ourselves and have that conviction instead.
I heard that multiple times. Almost everybody says that whosoever comes to my show. Because I think we do not take enough risk. And like I said, you don't take the risk because you do not have enough knowledge, and you do not have something in your experience, and your perception is limited. These are all the red flag or the showstoppers for you. So if we can address that, definitely we can take more risk. So this brings us to the end of our recording. So at this point, I'm going to ask you, how can people reach out to you, James?
Wonderful. Well, thank you again for having me. And I really hope that your audience received value from this. And that is my hope. If you go to jamesnelson.com, I built the site for you to have helpful references. That's where you can find out about the book, the podcast, white papers that I've put out. You can also connect with me on LinkedIn or Instagram. I'm pretty active there at James Nelson NYC.
Thanks, Jim. I really enjoyed our conversation today.
My pleasure. Thank you again for having me.